Hello viewers, welcome to my channel. I'm Hasham. So in this video I'm going to explain you about the types of audits, audit versus investigation, limitations of audit. Then I'm going to explain you about standards of auditing, then objectives of AASB and the procedure of issuing AS by the AASB. So these are the topics I'm going to cover up in this video. Last 3 videos I have completed on different topics like meaning and definition of auditing, evolution of auditing, then objectives of auditing, importance of auditing. All these things I've already explained in the last 3 videos. Hope you have already watched those videos. So if you have not watched, I suggest you to go to the playlist of my channel. Select the subject auditing, watch the initial videos, be acquainted, have a good knowledge on the meaning, definition, objectives. Then you come to this video, you'll get a complete grasp on the subject of auditing. So now I'm going to start with different types of auditing. As the different needs are required, so we have different types of audit. So the different types of audit based on different types of classification are as under. First of all, on the basis of organization, we have different types of organizations. So on the basis of the types of organizations, the audits can be classified as statutory audit and voluntary audit. Statutory audit means the audit which is required by statute or by law. The law make it compulsory audit, that is called statutory audit. So in which type of organization the audit is statutory? First of all, government audit. The government departments, the government undertakings, the accounts of these government departments or government undertakings will be conducted compulsorily by audit and accounts department. And this audit and accounts department will be headed by CAG, Comptroller and Auditor General of India, and he is appointed by the President of India. So under his guidance, all the auditing of government departments and government undertakings will be conducted. The CAG, Comptroller and Auditor General of India, he has to prepare the report, audit report, and submit it to the concerned government. That means it will be presented either in the parliament or in the state legislature. That is called government audit. Now next, non-government audit. So where non-government audit compulsory statutorily it is required. First of all, audit of joint stock companies. So all the joint stock companies in India are compulsorily required to get their accounts audited. The auditor will be appointed by the shareholders. The auditor has to audit the accounts and give the report in the annual general meeting. So compulsory statutorily audit is required in case of joint stock companies. Secondly, audit of trusts. There are 2 types of trust, private trust and public trust. A private trust is governed under Indian Trusts Act 1882. So under this act, the accounts must be compulsorily audited by an accountant. Whereas the private trust should also get their accounts audited if their income is exceeding the basic exemption limit. Then audit of cooperative societies. All the cooperative societies which are registered under the Cooperative Societies Act, they have to get their accounts audited. Next one is audit of banks. In India, all the banks are regulated by RBI. So RBI will appoint the auditors compulsorily for every bank in consultation with ICAI, Institute of Chartered Accountants of India. Audit of insurance companies. Insurance companies also must get their accounts audited compulsorily. So these are the non-government organizations whose accounts must be audited compulsorily. Next, voluntary audit. Voluntary audit means audit is not statutorily required, but the organization themselves will get their accounts audited for their benefit. It is not compulsory for them. Just like sole trading concern, partnership organization, or Hindu undivided family, these are the organizations whose accounts are not statutorily required to be audited, but they themselves will get their accounts audited for the benefit. That is called voluntary audit. So, simple example in case of partnership. In the partnership deed itself, they will write their accounts will get it audited by an independent auditor, so that the accounts will be acceptable to all the partners. There should not be any conflict among the partners regarding the profit sharing ratio or how to calculate, how the profit is calculated, all these things. So this is called voluntary audit. Apart from that, there are many non-profit organizations like hospitals, hostels, or any clubs or educational institutions. Its accounts are not compulsorily required to be audited, but for their control purpose, for their information, they will get their accounts audited voluntarily. So in this way, on the basis of organization, we can divide statutory audit and voluntary audit. Now, on the basis of functions, the audit can be classified as internal audit and external audit. Internal audit means the audit which is conducted internally by the organization with their own staff as a control purpose, as a measure of control. When the business expands, large number of entries are there, transactions are there. So they will keep themselves internal audit system. Their own staff will make the auditing continuously throughout the year. And it's a measure of internal control. Internal audit is a measure of internal control, so that the errors and frauds can be detected early. It will not wait till the end. Statutory audit, external audit will be required. So next is external audit. The external audit is an independent audit done by a third person, nowhere related to the organization. So external person will do the audit of the accounts of the company. So this is called external audit. A third party will conduct the audit. Next, on the basis of time. On the basis of time, we can classify as continuous audit or interim audit or periodic audit. Continuous audit is an audit which is conducted throughout the year as a routine process. When the business expands for large organizations where they have huge number of transactions, they will not wait till the end of the year to get the accounts audited externally. They will continuously make their accounts audited. So continuous audit. Next one is interim audit. Interim means in between. When audit is conducted annually, in between the year, one audit will be done. Normally, if a company wants to declare interim dividend, so before declaring interim dividend, the company will get its account audited, interim audit. Between two final audits, in between an audit is done, it is called interim audit. Periodic audit. Periodic audit is the audit which is done after the preparation of financial statements. At the end of the year, when all the financial statements are prepared, one audit will be conducted, that is called periodic audit. So these are the different types of audit on the basis of time. Next, on the basis of scope. On the basis of scope, audit can be classified as complete audit or partial audit. Complete audit means all the items of the financial statements will be audited. Each and every item which is appearing in the financial statements will be audited. That is called complete audit. Nothing should be left. Each and every item will be audited. That is called complete audit. Partial audit means it is not complete. Only a particular area will be audited. Example, a company found that its accounts relating to stock are suspicious. That means the management says something is going wrong in stock area. So accounts of stock will be audited. In some organization, the company finds that there are some discrepancies in receivables or in payables. So in receivable or payable, auditing is done. It is called partial audit. Only a particular area will be audited, not complete audit. Next comes on the base of objective. On the base of objective, we have different types of audits. First one, balance sheet audit. A balance sheet audit is the audit of items appearing in the balance sheet. So an auditor will focus only those items which are appearing in the balance sheet. So if he is having any doubt, he will go back. He will go back to profit and loss account, else he will go back to the ledger to find out doubt regarding the items appearing in the balance sheet. Secondly, cost audit. Cost audit is the audit of cost records, cost documents. The purpose is to examine the accuracy or fairness of the costing data, costing records. So the audit conducted to examine, to scrutinize the costing records, costing documents, statements are called cost audit. Management audit is the audit which is conducted to evaluate, to assess the activities relating to the management, whether the management is complying, conducting all the activities or not. Next comes secretarial audit. This secretarial audit is also compulsory according to Company Secretaries Act. In India, we have Indian Company Secretaries Act. So this Company Secretaries Institute has made it compulsory that company must conduct secretarial audit to find whether the company is complying all the provisions of the law or not. Next comes social audit. The company should go beyond earning profit. The aim of the objective of the company is not only to earn the profit, but to benefit the society. So how a company is benefiting the society, that is called social audit. Lastly is forensic audit. The audit which is conducted to evaluate the financial information regarding a particular legal case. It is called forensic audit. Normally, when a financial crime is conducted, like corruption is there, misappropriation of assets are there, similarly bribe is there. So like this, financial statement fraud are conducted. So some financial crime is conducted, then audit is conducted in order to find out the real fact in financial area. That is called forensic audit. So these are the different types of audit depending on different classification like organization, function, time, scope or objective. Now the next is auditing versus investigation. These two terms, auditing and investigation, are different terms. The common thing between these two are both are related with examination of financial statements. Whether it is auditing or investigation, both are concerned with examining the financial information. But the differences between auditing and investigation is, in auditing, financial statements are verified generally and reported to the shareholders. The auditing is conducted in order to evaluate, in order to study, verify the financial statement generally, and report should be given to the shareholders. But an investigation, verification of financial statement is done with a specific purpose. There is no general purpose investigation. Always investigation will be conducted for a specific purpose. But this auditing will be done generally to give the report on the financial statements. Secondly, auditor is appointed by the shareholders. Normally in a joint stock company, the auditor is appointed by a shareholder, whereas investigator may be appointed by shareholder, management or any other third party, like court may appoint, like government may appoint. So auditor is appointed only by the shareholder, whereas investigator may be appointed by the shareholder or by the management or by any other third party. Next, auditing is compulsory for joint stock company, whereas investigation is done based on necessity. Auditor is compulsory. Auditing is compulsorily required for joint stock company. But investigation is not compulsory. Only if there is a necessity, then only investigation will be done. Auditing is done at the end of the financial year, Whereas investigation can be done at any time, wherever it is required. Whenever it is required, it can be conducted. So these are the differences between auditing and investigation. Next is limitations of auditing. Auditing has so many benefits, but auditing will also suffer from some limitations. The first limitation, post-mortem. Actually, auditing will be done after closing all the accounts. That means just like post-mortem, a post-mortem will be done only when the person dies. After the death of a human being, then only post-mortem will be done. Similarly, this auditing will also be done after completing the accounts. So there is little purpose served in auditing because the fraud, the error, mistakes already have been done during the year. The only advantage, in future, the management can be able to take some measures to prevent the fraud, to prevent the error, to remove all irregularities. Then auditors' dependence on other experts. Each and everything, every work will not be done by the auditor. Many a times auditor will depend on the expert reports, technical experts or legal experts. It will take the reports while doing his job. That means he is not doing all the work. He is dependent on some other person's work also. Costly affair. Only large business organizations, they can be able to conduct the audit. A small business organization, it will become a costly affair to conduct the audit. Incomplete picture of financial statements. Now see here, when the business expands, the number of transactions increases. All the transactions cannot be checked. That means the auditor has to apply sampling technique, test checking. So when he gives the opinion, he is not giving the opinion about the complete transaction. Only sample transaction he is giving his opinion. The next one, lack of independence of auditor. In order to get a true copy or a correct report from the auditor should be independent. That's why the auditor will be appointed by shareholders. By the shareholders, auditor will be appointed, so that the auditor should be independent. If the person, if the owner himself will appoint the auditor, then definitely independence will not be there. He cannot be able to give the true and fair view. So these are some of the limitations of auditing. That means on account of these limitations, we cannot underestimate the advantages. Advantages are many. Some limitations are there of auditing. Standards of auditing. In India, ICAI, Institute of Chartered Accountants of India, has constituted AASB, Auditing and Assurance Standard Board. This AASB will issue auditing standards, so that these auditing standards must be applied by all the auditors in India in order to complete his job of auditing, in order to serve the purpose of auditing. So what are the minimum rules, minimum procedure to be followed by the auditors? That is given by AASB. So standards of auditing. Auditing standards provide minimum guidance for the auditor. So this AS will give minimum guidance to the auditor that helps determine the extent of audit steps. What are the audit steps he has to apply? What is the procedure of auditing he has to apply? That will be given, that will be specified by AS. That should be applied to fulfill audit objectives. They are the criteria or yardsticks against the quality of audit results are evaluated. That means these are the criteria or yardsticks which are given by auditing standards. Then compliance of AS is mandatory under the Companies Act 2013. So in India, Companies Act 2013 make it mandatory that every auditor must follow auditing standards. Standards of auditing. The ICI constituted ASB to review the existing auditing practices in India. So in India, the regulating body is ICAI. The accounting regulating body is ICAI. The Institute of Chartered Accountants of India has constituted AASB, Auditing and Assurance Standard Board, in order to review the existing auditing practices in India. AASB under the Council of ICA has formulated new standards to ensure that information provided in financial statement is of high quality and is acceptable worldwide. The purpose of AASB is to make auditing acceptable throughout the world. The auditing should be fair. Then objectives of AASB, Auditing and Assurance Standard Board. What are the objectives? First, review and identify areas to be improved. The AASB will review, will find out what is the current procedure and what is the procedure of auditing followed throughout the world. Then secondly, formulating standards. So after finding out the area where standard is required, they will formulate the auditing standard. Revision of standard. Because the economic conditions are changing, environment, the law, everything is changing. That means auditing standards has also to be reviewed from time to time and should be changed. Next one is issue specific guidelines. Guidelines should be issued while implementing these auditing standards, so that there should not be any doubt in the minds of the auditors regarding this auditing standards. Issue specific guidelines, issue clarifications. If the auditors have any doubts regarding accounting auditing standards, they can ask a clarification from the AASB. Then prepare and publish literature. A number of journals will be published, literature will be published by AASB, so that it will become a guide to all the auditors in India. So these are the objectives of AASB. Then last one is procedure of issue of AS by AASB. So how the auditing standard will be issued by AASB? What is the procedure adopted? The first one is selection of area which requires specific auditing standard. First of all, AASB has to find out which specific area of auditing, requires AS, requires the standard of auditing. That we have to find out. Setting up the study group. After finding out the area, the AASB will make a study group for the purpose of setting up AS and preparation of a draft. A rough draft has to be prepared regarding AS by the study group. Then circulation of the exposure draft to all concerned, receiving suggestion and discussion. After preparing the draft of AS, it will be circulated and issued to different parties so that they can be able to get the feedback, discussion from the suggestions from those persons. Preparation of final draft after taking into account all the feedback received for consideration of ICAI. After getting all the feedback from different groups, it will make a final draft of the AS and submit this final draft of AS to the ICAI, because ultimately the authority of issuing the AS is with ICAI. AASB directly will not issue the AS. Ultimately AS will be issued by ICAI. Lastly, issue of AS by the ICAI after making any modification considered necessary. If ICAI feels there are some modifications required, so they will modify and then issue the AS. That's all. So these are the things I have explained in this video regarding the types of audit, audit versus investigation, limitations of audit, auditing standard, objectives of AASB, and the procedure of AASB regarding issue of AS. This is the end of first unit of your subject auditing. Inshallah, in the next video, I'll start the second unit of the subject auditing. Take a screenshot of this note so that you can be able to maintain the points